PLDT, Incorporated, Philippine Long-Distance Telephone Company, is the Philippines' oldest and largest telecom provider. In this video, we'll take you through PLDT's journey, business, finances, and what the future might hold. The goal is to explain everything in simple terms, perfect for beginners, yet still insightful for experienced investors. We'll cover PLDT's history, how it makes money, the competitive landscape, recent results and developments, dividends, risks, and growth opportunities. PLDT was founded in 1928 and was originally a government-sanctioned telephone monopoly. Over time, it was privatized and grew into the Philippines' largest telecom company. Today, PLDT is led by business tycoon Manuel V. Pangilinan, often called MVP, who serves as both chairman and CEO. The company is listed on the Philippine Stock Exchange and even has ADRs in New York. Major shareholders include MVP's Metro Pacific Group, Japan's NTT, Nippon Telegraph and Telephone, and local conglomerates like JG Summit. PLDT's evolution mirrors the Philippines' own growth. In its early years, PLDT built fixed-line telephone networks across the islands. In the 1980s and 90s, it introduced mobile phone service, smart communications. By the 2000s, it expanded into internet and data services. Today, PLDT's core businesses span fixed-line telephony, mobile service, broadband internet, and digital services. It also invests in media through MediaQuest and utilities. Essentially, if you have a landline phone, a cell phone, or internet at home in the Philippines, there's a good chance PLDT, or its subsidiary Smart, is involved. Over its 95 years history, PLDT has become a household name in the Philippines. Next, let's break down how PLDT makes money. PLDT's operations are split into several segments. Wireless, mobile, services. This is mainly through PLDT's subsidiary Smart Communications. Smart sells prepaid and postpaid mobile plans, data bundles, and now 5G service. Mobile service is a huge revenue driver. In Q1 2025, PLDT reported roughly 21.3 billion pesos in individual wireless revenues. Fixed line and broadband, home, services. Under brands like PLDT Home and PLDT Home Fiber, the company sells home broadband, fiber optic internet, landline telephone, less popular now, and cable TV bundles. PLDT's fiber business is growing rapidly. For example, fiber-only revenues were 14.7 billion pesos in Q1 2025, up 7% year-on-year, and now make up 97% of all PLDT Homes revenue. PLDT's fiber network is extensive, 73% of Philippine towns covered by 2025, giving it a strong edge in home broadband. Enterprise and data services. PLDT serves corporate clients with network services, cloud solutions, cybersecurity, etc. Its enterprise arm Vitro provides things like leased lines, data center hosting, and software services. In Q1 2025, PLDT Enterprise had 11.9 billion pesos in service revenues. Demand here comes from businesses, banks, government, and growing digital needs of clients. Digital platforms and other. PLDT has stakes in fintech and media. Notably, it owns Maya, formerly PayMaya, a digital banking and payments platform. In Q1 2025, Maya became profitable and contributed 127 million pesos to PLDT's core income. PLDT also owns TV and radio stations through MediaQuest, though those are smaller parts of the business. In summary, PLDT's revenue streams span mobile subscriptions, fixed broadband and telephone services, enterprise data services, and other digital services. Its products include cell phones and SIM cards, fiber optic internet service for homes, and complex networking solutions for businesses. This diversified model means PLDT captures revenue from both consumer and corporate markets. The Philippine telecom industry has a few big players. PLDT's main competitor is Globe Telecom, and a newer player is Dito Telecommunity, a third telco started in 2021. plus converge and fiber broadband. Globe is strong in mobile and also offers broadband via its subsidiary, while Converge, a pure fiber company, is aggressively expanding its fixed-line network. Dido is aiming to grow its mobile market share, backed by Denisoy's companies and partners from China. Overall, PLDT and Globe together control most of the market, though Dido has added pressure on mobile prices. By revenue, PLDT is still number one. In 2024, PLDT posted about 216.8 billion pesos in revenue, up 2.8% from 2023, and 32.3 billion pesos net income. Globe's 2024 revenue was around 181 billion pesos with 24.3 billion pesos net income. Globe's new CEO has openly said he wants to overtake PLDT by revenue within 5 years. This highlights how fierce the rivalry is. Globe is bigger by market capitalization, but PLDT still earns more and is more profitable. In practice, this means PLDT must keep innovating and expanding, for example, more fiber, 5G, data centers to stay ahead. Competition is intensifying. For example, Converge recently teamed up with Elon Musk's Starlink satellite service to reach remote areas. This has raised concerns that fiber and fixed broadband competition will heat up, potentially eating into PLDT's enterprise and broadband margins. Meanwhile, Dido is steadily adding subscribers in some regions. Regulators are also encouraging more competition to improve service and prices, which can be both good and challenging for incumbents like PLDT. Let's look at PLDT's recent financial results. Overall, PLDT has seen steady revenue growth, thanks largely to data and broadband services. 2024 was a strong year. Revenues of roughly 217 billion pesos and net income of 32.5 billion pesos, a 21% jump in profit from the year before. This profit boost was driven by higher service revenues and cost efficiencies. For context, in 2023, PLDT had about 210 billion pesos revenue and a profit around 26 to 27 billion pesos. So PLDT's business is growing, albeit slowly on top line, a few percent per year, because telecoms are fairly mature. Quarterly trends also look solid. In Q1 2025, PLDT's gross service revenue was 53.4 billion pesos, up 2% year-on-year, and EBITDA margin held at 52%. Its broadband and mobile segments generally offset declines in old fixed-line services. For example, PLDT Home's fiber subscribers grew by over 100,000 in Q1 2025, reaching 3.47 million, and it had the highest average revenue per user in the industry at 1,493 pesos. This means more customers are upgrading to premium plans, which bodes well for future revenue. However, capital expenditure is high in this industry. PLDT's CAPEX guidance for 2025 is around 68 to 70 billion pesos as the company invests in fiber, 5G, and data centers. These are needed to grow, but they also weigh on free cash flow in the short term. Notably, PLDT's net debt, total debt minus cash, was about 270.7 billion pesos in March 2025, with a net debt to EBITDA ratio of 2.48 times. That's considered reasonable and investment grade, but still a leverage to watch. In fact, PLDT had explored selling part of its data center unit to cut debt, as we'll discuss next. For income investors, PLDT is known as a high dividend stock. The company pays cash dividends twice a year. In 2024, PLDT declared a total dividend of 96 pesos per share, first half 50 pesos and a final 46 pesos. At a share price around 1,300 pesos, mid-2025, that implies a yield of roughly 7 to 8%. According to recent data, the trailing yield is about 7.4%. This is significantly higher than many telecom peers, reflecting PLDT's policy of returning most earnings to shareholders. The payout ratio is around 66%, meaning PLDT distributes 2/3 of profits as dividends, which leaves enough room to fund investments. However, note that dividend growth in PLDT has slowed. The total dividend in 2024, 96 pesos, was lower than in 2023, 108 pesos. Investors should be aware that dividends depend on both earnings and regulatory guidelines, like BSP rules. Still, for now, PLDT's dividend yield remains attractive, especially for those seeking income. Now let's cover major news and initiatives. Data center expansion. PLDT's data center arm, Vitro, has been a focus. In 2025, PLDT shifted strategy. Instead of selling a stake in Vitro to raise cash, talks with NTT and others fell through. PLDT decided to build out the business. It inaugurated a new 50 megawatts AI-ready data center in Santa Rosa, Laguna, in 2025 and announced a planned 100 megawatts facility in Cavite at an estimated 40 billion pesos cost. According to PLDT's chairman MVP, they will try to build the business by expanding capacity. This means continuing to invest in data centers for cloud and enterprise clients, rather than selling them off. The hope is that leasing this new capacity will generate future cash and value. Originally, PLDT had wanted to sell up to 49% of Vitro to cut debt, but failed to reach agreeable terms. Fiber network and infra deals. PLDT is also deepening its network reach. In June 2025, PLDT secured a 2 billion pesos social loan from HSBC Philippines. This low-interest loan is earmarked for expanding PLDT's fiber optic network in underserved areas, the so-called 4th to 6th class municipalities and remote communities. In fact, PLDT won an award as the Social Infrastructure Deal of the Year in Southeast Asia for this financing. As of March 2025, PLDT's fiber network already covers 73% of towns and 91% of provinces in the country, which underpins both its fixed broadband and mobile services. Meanwhile, its mobile unit Smart maintains 97% population coverage of 4G and 5G. These infrastructure expansions are key recent developments. Digital transformation and fintech. On the digital side, PLDT's fintech arm Maya is gaining traction. Maya became profitable in Q1 2025 and contributed 127 million pesos to PLDT's core income. Maya has become the leading digital bank in the Philippines, with deposits surging, such as digital bank deposits in the Philippines crossed 100 billion pesos in early 2025, and new offerings like credit cards. PLDT sees fintech as a growth driver. Chairman MVP has said broadband and fiber continue to anchor the business, while digital finance is emerging as a strong new driver. So one major development is PLDT's push into digital financial services, which could open new revenue sources beyond telecom. 5G and advanced services. PLDT and Smart is rolling out 5G extensively. By mid-2025, Smart boasts 97% 4G and 5G population coverage. PLDT has also experimented with advanced services like private 5G networks for enterprises, such as supporting Southeast airports and cloud gaming partnerships. These are ongoing developments to watch. In short, PLDT's recent news centers on building out networks and new businesses. Rather than cut back, PLDT is plowing cash into fiber, 5G, data centers, and fintech. This shows the company is positioning for long-term growth, even if that means near-term debt remains high. Even as PLDT grows, it faces challenges. The biggest risk is competition. As mentioned, Globe is closing the gap, and Converge, with Starlink, is targeting connectivity gaps. If competitors price aggressively or innovate faster, PLDT could lose market share. Regulatory changes are another concern. For example, new taxes or stricter SIM registration rules could affect revenue. Also, the debt load is a factor. PLDT's debt is high, about 285 billion pesos gross as of Q1 2025. Most of it is investment grade, but higher interest rates or currency swings. Some debt is in US dollars, could increase costs. If growth slows, servicing debt while maintaining dividends could become tricky. Technological disruption is a moderate risk. PLDT must keep investing in new tech, like 6G or next-gen fiber, to stay relevant. Missing a technology wave could hurt. Finally, macro risks, inflation, currency fluctuations, or an economic downturn could dampen consumer spending on telecom services. Overall, these challenges mean PLDT needs to balance growth investments with maintaining profitability and cash flow. But historically, PLDT has managed to navigate tough times. For example, it improved net income by 21% even in 2024, so it has some track record of resilience. Still, investors should watch how competition and debt evolve as key risks. Looking ahead, PLDT has several growth avenues. Fiber and 5G rollout. With huge portions of the Philippines still unserved by high-speed internet, PLDT can keep expanding fiber to new towns. More fiber means more subscribers and higher value plans. On the mobile side, 5G adoption in the Philippines is still early. PLDT can monetize 5G with premium services, enterprise solutions, and fixed wireless access. Enterprise digital solutions. Businesses across banking, retail, BPOs, and government are going digital and need reliable connectivity. PLDT Enterprise's ICT services are poised to capture this demand. If the economy grows, corporate tech budgets usually grow faster, benefiting PLDT. Data centers and cloud. The Philippines is attracting more cloud and data needs. PLDT's Vitro data centers, especially the new AI-ready facilities, can capitalize on the growing demand from hyperscalers like Google, AWS, local banks, and outsourcing firms. PLDT mentioned plans to build multiple 100-megawatt facilities, which signals strong commitment to this market. Fintech and digital finance. Maya's rapid user growth is a big opportunity. Digital banking, e-commerce payments, and remittances are all soaring markets. PLDT, with external partners like Udena, Yondu, and others, has a chance to lead in fintech. For example, Maya's deposits and transaction volumes have jumped, and it is now issuing credit cards and loans. A successful fintech ecosystem could add substantial non-telco earnings. New ventures. PLDT has also hinted at exploring new growth areas like renewable energy for its towers and even digital media. Any smart acquisitions or partnerships could open future revenue streams. Analysts generally view PLDT as well-positioned to benefit from the Philippines' continuing demand for connectivity. For example, one analyst noted PLDT's growth is fueled by sustained demand for connectivity and digital solutions. Assuming the economy recovers, data consumption rises, and PLDT executes on its expansion plans, the company should see moderate growth. In summary, PLDT is a century-old telecom giant that plays a vital role in Philippine communications. Its diversified business, from mobile to broadband to fintech, has driven steady profits and strong dividends. The company faces stiff competition and high debt, but it also has leading infrastructure and growth projects, fiber expansion, 5G, data centers, digital banking, that could pay off in the years ahead. For beginners, key takeaways are PLDT is a blue-chip stock with a high dividend yield, around 7 to 8%, operating in a duopoly market with Globe plus a new entrant Dido. For experienced viewers, note that management is balancing growth investments with debt control. For example, they chose to expand data centers in-house rather than sell them, and secured financing for network build-out. Thanks for watching this deep dive into PLDT. If you found this video helpful, don't forget to like, share, and subscribe to Thrifty Finance Vision PH for more content on Filipino investing and personal finance.